As part of CoinDesk's Culture Week, Matt Leising, Bloomberg journalist, co-founder of DeCential Media, and author of Out of the Ether, talks about the projects employing the DAO structure, which these days range from buying an NBA basketball team to increasing the wealth of women to buying a copy of the U.S. Constitution. Please welcome Matt Leising. Hello there, Matt. So perhaps we can start off with, maybe you can explain what a DAO is and how they have evolved over the years.
Sure. Good morning, and thanks for having me. As you said, DAOs are a collection of people who basically have, it's a different way of organizing human beings. It's more of a flat sort of structure. There's no CEO or like C-suite executives. It's meant to be, kind of everybody has a vote and a say in what the DAO mission is about. Usually they will sort of, as people do in real life, people will gravitate towards things that they like to do. Maybe that's writing code or marketing or sort of like community building. So usually in a big DAO, you will see sort of subgroups form, and there's examples of that all throughout crypto. And they got their start. The DAO got its start famously in 2016 when there was the DAO was created to try to raise money for Ethereum startups. It, of course, was hacked and led to the hard fork in Ethereum back in the late summer of 2016.
Well, it's so interesting to see how they have evolved over time. And in your article that you've written for us, I mean, you go into, one of my favorite stories, ConstitutionDAO, which is just a group of people who, about 2 weeks before an auction at Sotheby's, I believe, they were about to auction off the U.S. Constitution, a copy of it. They got together, they raised something like almost $47 million to try to win that document, but they lost to Ken Griffin, who's a hedge fund manager, founder of Citadel. And it kind of reminded me, of the tension between traditional legacy finance and this new digital finance. But in this case, traditional finance won. So what do you make of the whole situation?
Well, first thing, never go into an auction letting everyone know how much money you have. You don't want to do that. He could have, Ken Griffin could have bet or paid $1 more for the Constitution. I'm not sure we'll ever know that. But the other thing that was fascinating was just the global reach and the speed with which ConstitutionDAO was able to kind of get up and going. It was a very clear, obvious mission. We're going to buy a copy of the Constitution. Here's, our ETH address. Send your ETH if you want to help. I think it was really kind of breathtaking and very interesting, and shows the network effect that people often talk about in crypto. This was global. People often say, well, why can't you just do, a GoFundMe? Well, a GoFundMe is centralized, and they could have shut something like this down if they didn't approve of it. I'm also not quite sure how global in reach GoFundMe is. With a DAO, it's uncensorable. You can do pretty much whatever you want, unless, you can break the law. I mean, it's kind of like, it's really up to you about what you want to do. And then it's got a global reach. And of course, it's crypto native, so everybody's already got their ETH or whatever you might want to contribute to the treasury, and so you can see something like a crowd fund of $47 million in a matter of days, which is to me just astonishing.
Matt, just to switch topics here for a moment, you also have opined about how the mainstream media doesn't really get crypto, and that's a really interesting topic. So can you just explain what you mean by that?
Yeah, sure. I think it's come out of, I've been covering crypto for more than 6 years now, since 2015. And I've gone through a couple of the cycles here, booms and busts. And I think, there was a time a few years ago where it did seem, and I think I've asked this of a lot of people, and there's general agreement that there was a time when people were not sure that, like Ethereum was going to kind of make it, and that, the bigger picture vision was going to succeed. That obviously didn't happen. And what I found fascinating, and as I wrote about, was that what people did is, they didn't pay attention to the price. They just kept building the things that they wanted to build and kept making this future that they wanted to see. And so out of those doldrums of the crypto winter, we got DeFi summer with collateralized lending. We'd already had ICOs, which were a new peer-to-peer way of raising capital. DAOs are now making a comeback. You've got a lot of other DeFi applications that are testing the boundaries of remaking sort of like organizations and social, institutions in a decentralized peer-to-peer fashion. And so then once that all came back around, a lot of skeptics, I think, kind of came back and almost had a hardened opinion about what was going on, and that, this thing, it's back again. This was a scam in 2017, and it's a scam now. And I guess I'm just kind of sick of it. I think people need to educate themselves and figure out that this is not going away. I think you saw some of that with what Elizabeth Warren was saying yesterday in the Senate. There's a lot of education that needs to be done here, both in the media and in Washington, because this industry is not going away. It is creating an alternative to a lot of the traditional ways that we think about organizing and transacting. And I guess it's just sort of like, if you're still sort of just burying your head in the sand and saying that this is all going to just come crashing down at any moment, I don't really have time for that anymore.
Matt, just to follow up on that, can you give us a couple specific examples of a take that the media got wrong about crypto? Like what would be a headline, or what, just to expand on that a little further?
Yeah, I think, at my old employer, there's a lot of skepticism about it. There's still a lot of attention paid to how prices are up or down, without much understanding of the underlying technology and what is actually being achieved. I think the Financial Times is sort of rather famous for its really skeptical opinion of crypto from the get-go. I think they've slowly come around in the last maybe year or so, but are still miles away from understanding this technology. And I think that's the main point that I have here, is that not enough mainstream journalists and editors are taking the time to learn about the technology, and so that they can understand it and write more informed articles, and also know when somebody might be trying to pull one over on them.
So Matt, you for many years you were also the go-to writer for stablecoins. You had incredible coverage on that. It was a must-read for everybody. What is your view of stablecoins now, and how has it changed over the past few years since you started covering it?
I think there are still a lot of questions. I wish we had much better visibility into Tether and what they're doing. I find it fascinating that the market doesn't seem to care and still values Tether at $1, even though for the most part from the outside, it's hard to say that it really is one-to-one backed with assets. I do know institutional investors who use Tether, and I know how that works, and I've spoken to them, and I've spoken to many different institutional investors that are moving hundreds of millions of dollars around, and so there's that side of Tether, and then there's the retail side of it for smaller traders. I think they work in very different ways. I think the proliferation of stablecoins is really interesting. I think some of the collateralized stablecoins worry me a little bit when you've got a basket of other crypto that's backing the stablecoin. I'd much prefer harder assets like treasuries or cash to be in a bank account, because that's where you can get kind of feedback loops, and you're never sure about what's going to happen with liquidations and things like that. But my feelings haven't really changed. I find it a really interesting and integral part of crypto, and I think it makes perfect sense why you'd want to have something like this. And I'm still I'm still confident that the U.S. government is going to eventually issue a digital dollar, and then I think that would be that, as far as I can tell, in terms of stablecoins. So yeah, I mean, maybe not. I mean, I think there's a room for a lot of different stablecoins and different approaches. A digital dollar would certainly add to that sort of mix, and so. Again, like my main point, I think it's here to stay, and I think it's something that was created because it's necessary.
To follow up, do you think that the fact that stablecoins are opaque is actually kind of a feature and not a bug? And do you think that that's also causing inflated prices right now in crypto in general? Because so much of crypto is traded against stablecoins that it may be inflating the prices for the time being?
That's a tough question. I'm not sure. I mean, I'm always for more transparency. That's what I would love to see. The books opened a lot more across the board. In terms of whether it's an inflationary effect on crypto in general, I'm not really sure about that, to be honest.